Hello and welcome back to The Note, coming to you today from the Tokyo Stock Exchange, where the last act of a tumultuous week on world markets is about to take place. Now, we've seen renewed heavy sell-offs this week. The world stock market as a whole entered into a bear market. You've seen great pressure on the oil price, you've seen great pressure on emerging market foreign exchange, but arguably no country has been more affected than Japan. As of this week, the Nikkei 225 has dropped into a fresh bear market. It's down more than 20% from its high of last year, and the volatility here has been intense. On Thursday alone, you saw the topics gain more than 2% in the morning and then fall more than 4% in the afternoon. Now, what can possibly explain this? If you take a look at the Japanese corporate sector, the companies are due to report really quite strong earnings. That's not something you can say about the US. They're generally full of cash. The economy is looking relatively strong, even if by Japan standards, even if people are concerned about the direction Abenomics is taking, and there's much criticism of the intention to raise consumption tax again next year. And when it comes to the critical catalysts that have led world markets, we know oil has been a big issue, but Japan imports all its oil. A lower oil price is a straightforward benefit for companies here. And if you look at China, China in many ways is a competitor for Japan. Certainly Japan doesn't depend on it in the way that many other countries like Brazil do. So why sell Japan? The most plausible culprit that people are blaming here, and I think they may well be right, is sovereign wealth funds. They exist to provide their countries, generally big petrodollar oil producers, with a cushion against a fall in the oil price. Well, the oil price has fallen, they need their cushion, and that means they have to sell something. And it looks as though they're selling Japan.
The Japanese market still does not have domestic leadership, domestic sponsorship. So the bulk of the trading, 70 to 80% of daily trading, is done by global investors, in particular global macro speculators. Japan is highly liquid, and any move towards risk off, Japan offers you great opportunities. We know that roughly half of the sovereign wealth fund, right, are basically dependent on the oil price for their main source of revenue. So obviously, right, there is an additional negative, and the negative demand and supply relationship in the market, the oil price, adds negativity.
Now, why sell Japan? Well, in large part because you can. This is a large, deep, liquid market. You can sell very quickly and you can get back in very quickly. You can't say that of many other emerging markets around Asia. And you're actually sitting on a profit here in many cases. Japan actually had a very good year last year. It was the best performing developed market. Far less embarrassing to take a profit than to take a loss somewhere else. Is it really the sovereign wealth funds? Well, the evidence is circumstantial, but it is very striking how the sell-off in world markets has accelerated as we've seen the unexpected fresh leg down in oil prices at the beginning of this year, something that really should have taken many big oil producers by surprise and caused them to need to draw down on those funds. Now, you can hear at the moment many investment banks putting out notes reassuring investors, saying, yes, this is financially driven, it's not about the economic fundamentals, therefore you don't need to worry too much. Now, that's true to an extent, but I think one of the critical lessons we learned from the crisis of 2008 is that markets can create their own reality. For example, here in Japan, it's been an aim to create inflation. They had done so for a while. The fall in the oil price means that aim has now gone by the wayside once more. Falling asset prices very dramatically change the calculus for central banks, and that's perhaps the next act in this drama. We heard from the European Central Bank this week, strongly hinting that there will be more stimulus coming very soon. Next week, we will be hearing from the Federal Reserve. Has to be a chance that they will begin to step back from their current forecast that they'll be raising rates as many as 4 times this year, which at this point seems rather implausible. And here in Japan, we'll be hearing from the Bank of Japan, who have a far harder decision now than it looked like they would have only a few weeks ago. That, I think, is where the next act in this drama comes. We have to see what the central banks do in response, and whether they are able to change the reality which markets are in the process of creating.